Diana Avigdor is Vice President and Portfolio Manager and Head of Trading as well at Barometer Capital Management. She joins us now from the TSX. A lot of roles there, Diana. And I hear you. I mean, as you say, every day that the market doesn't sell off, there's more and more anxiety. But at the end of the day, what does that really mean? Because we have not seen these corrections that people were really looking for. So do we care about the anxiety that other, you know?
Yeah, absolutely. We care about the anxiety, and every day that it doesn't sell off, there's more people calling for a correction. Look, I understand that the markets, the indices are at all-time highs, and there's slow growth, and everybody's seeing the PEs expanding, and, you know, when is it going to end? It's been a long stretch, and when are we going to have a correction? And it's possible that we're going to have a little correction. Not every correction is, or trading sell-off is a direction change. And from my perspective, that's what I'm sort of calling for. Markets are in good shape. We may have some volatility this week. It doesn't mean that the long-term investor should take in this noise into his portfolio and trade on this, leave it to short-term traders. PE, multiple expansion periods are very difficult for investors to explain away for a long period of time. But if you look at the 1990s, 8 of the 10 years of that decade has been multiple expansion.
Right.
Last year was the first year we had multiple expansion since 2012.
So
since 2000, I'm sorry. So we've had a lot of cash build, but we haven't had that long of a multiple expansion, so
and
it's
I think
powerful.
That's important to put in perspective, because a lot of people say that, you know, we're at record highs and or that the valuations are expensive. But what I'm hearing from you is that, look, they might be expensive, but we could have years of them continuing to move higher. Is that the right way to look at this? In other words, we are in a bull market? Well,
that's exactly it, Catherine. Also, the earnings catch up with the multiple expansion. It looks expensive. Say a stock looks expensive, but the earnings estimates and the earnings have not caught up. It's expensive for a reason. It's expensive because the expectations for an earnings growth or for some catalyst. And then when that event happens, or if the earnings catch up, suddenly the PE multiple doesn't look so expensive, and we start the cycle again.
Right.
And as we've seen in the late 90s, expensive can stay expensive for a long time. For different reasons.
It really can. Diana, let me get your take as well then as it relates to merger and acquisition activity. It feels like every single Monday we come in and there's more deals to be announced that are being announced that happened today. Once again, call it 4 or 5 at least on the tape. So some say, look, we're right at the same levels we were back in 2007, but put that into perspective for us as well. You know, where are we really? Are we at the beginning of a lot of deals taking place or towards the middle to tail end, do you think?
Look, it's a very interesting dynamic going on. There is not that much growth in the economy here, but there is a lot of cash. There's some financial repression going on by the governments resulting from the financial crisis, obviously. Lots of cash is being built. Rules are and laws are being changed. Companies don't always know what the new rules are going to be, but they have a lot of cash. They invest in themselves, in their share buyback, in their dividends, their dividend growth, and buying growth through M&A. We've heard a lot about whether things are tax inversion or they benefit other internal financials. So there's some of that going on. And then, you know, as the economy grows, and, you know, to be clear, we don't want a really fast-growing economy.
Right.
This is lovely. Just don't go into deflation.
But Diana, when you see all this merger and acquisition activity, do you look at that as a top and a reason to be concerned, or do you say, look, there's more company managements that are getting more confident and seeing opportunities, so they're going to go in and buy? Which camp are you in?
You know, I understand the conversation that people are saying, oh, that's it, this is the top, everybody's buying each other. But there is still lots of growth to come. If the economy repairs the way it could in the next, say, 5 years, and we go back to normalized earning growth and margin conversations, you know, the M&A that's going on right now will be put in the right context.
Fair point.
There's still a lot more valuation conversations to be had outside an M&A situation that we have right now.
Diana, we've only got 20 seconds left, but what are 2 names that you're buying today?
We've seen some flows in the energy names. We still like energy, technology, financials, and asset managers.
All right, we'll leave it there. Diana, good to see you. Thanks so much for joining us.
Thank you.
That was Diana Avigdor, Vice President, Portfolio Manager, and Head of Trading at Barometer Capital, joining us from the TSX Broadcast Center.